Dear students, we will do module 77. This is deductions under section 57. So income from other sources, you have to remember deductions are covered under section 57. See, in the case of house property, deductions are covered in section 24. Salary, deductions are covered in section 16. Like that, income from other sources, deductions are covered in section 57. Now, important points regarding deductions under section 57. For dividends received from interest on securities, bankers' collection charges or commission are allowed as a deduction. Sometimes we will entrust the responsibility to bank. So if banker is collecting, the collection charges are allowed. For letting of machinery, plant or furniture, repairs, depreciation and insurance premiums are allowed. Subletting of the houses. So these deductions are allowed. In case of family pension, a deduction equal to 33 and 1 by 3% of such pension or rupees 15,000, whichever is less, is allowed to legal heirs who opt to be taxed under the old regime. Now, important points regarding deductions under 57 continuing. Under the new income tax regime, the deduction for family pension is rupees 25,000 or 1/3 of the family pension, whichever is less. This is an important point for 2 marks question. So earlier it was 15,000, now it's raised to 25,000 for under the new regime. Now, deduction from any other income chargeable to tax under the head income from business is allowed based on the following conditions. The expenditure is incurred exclusively for earning such income. See, deduction from any other income chargeable to tax under the head income from other sources is allowed based on the following conditions. One is expenditure is incurred exclusively for earning such income. See, for example, for writing books, proofreading charges, purchase of reference books, typing charges, all these are allowed. Next is, it should not be a capital expenditure. It should not be a personal expenditure. It should be incurred in the relevant accounting year. Deduction from royalties received by authors other than those writing for films. Actual expenses can be claimed. So that is the advantage. Proofreading, purchase of books, reference books, internet charges, typing charges, proofreading charges, all that can be claimed. Deduction regarding interest on compensation or enhanced compensation. A deduction equal to 50% of such income is allowed. Now, next point is expenses expressly disallowed as deduction for income from other sources. This is given under section 58. That meaning these expenses are not allowed. Any personal expenses of the SSC, interest payable outside India if tax is not deducted at source. Next, salary payable outside India if tax is not deducted at source. Then for income from lotteries, crossword puzzles, races including horse races, card games and other games, gambling or betting, no expenditures are allowed. Now, next point is deductions under section 80C to 80U are not allowed in respect of winning from lotteries, races, gambling, crossword puzzles, etc. Similarly, no expenditure is allowed for deemed income under section 68, 69, 69A, 69B, 69C and 69D. See, income from undisclosed sources. It's considered as deemed income and it's charged at flat 60%. Now, diagrammatic representation regarding grossing of income. This diagram you have to remember. This will help you while doing the problems. See, two types of securities are there. In the government securities and commercial securities. So if you can remember this diagram, it will be very helpful when you are doing the problems. So government securities, tax-free securities are completely exempted. But if it's less tax, taxable but do not gross up. So this is the rule regarding government securities. If it's tax-free, completely exempt. If it's less tax, taxable but do not gross up. Next is commercial securities. What are the rules for grossing up of commercial securities? Tax-free meaning it's taxable and always gross. Less tax meaning taxable, gross only when the amount received is given. Say for example, rupees 2,000 is received as dividend. Then you have to gross. When the rate of interest is given, do not gross up. Instead of 2,000, if it's given 10% is the rate of interest, then do not gross up. So this is the rule regarding grossing. So this section is also important, and that this module, that is the importance, what all expenses are allowed, what are not allowed, what are the rules for grossing for government securities and commercial securities. Happy learning. Thank you.